What is up, YouTube? Welcome back to another video. It feels good to be back. It has been a week since the last video, and that was the Wyckoff trading tutorial. If you've watched that one, or if you haven't watched that one, I would suggest you go watch that first. And then in this video, you'll see me apply the concepts I gave out in that tutorial and see how I applied them into a live trading environment. Okay. For the people that don't know, I'm currently on vacation. That's why I'm a bit less active. Normally, I will post a post-trading analysis video every night because it's basically also in my own journal. My YouTube is my own journal. I tell you guys about the trade, making me also reflect on the trade. I'm telling you what went right, what could I have done better, and then by telling you guys, I learn myself, and then obviously you guys learn from it as well. So it's a mutual exchange. I have taken trades the past 7 days. So I'm just going to go over all of that. It's basically just a weekly recap and then also a recap of today because today was a nice trading day. As you can see on the screen, we catched a very nice short. I posted about this setup on Twitter as well in case you already see my post. But I will go into great detail now about my actual thought process behind every setup. And I can already tell you that almost every trade that I took was a Wyckoff. Simply as that. Almost every trade that I took was a Wyckoff. So really, I'm suggesting go watch my Wyckoff tutorial first and then watch this one. Okay? So let's just get straight into it. There were many trades, but let's just start with Bitcoin. We'll clean up all the Bitcoin price action of the past 7 days. You know, I have been on the BB stream in case you see me there talk about Bitcoin. But I'm just going to recap everything and tell you guys how you could have traded effectively using Wyckoff and also market structure, etc. So on the Bitcoin time frame, to build some context like we always do, we are in this massive Wyckoff Model 1 reaccumulation range. We got that break right here. We're expecting a higher low right here and then the higher low right here, both called on the live stream on BB. And then we got the move up that followed, and then we came into our first, I don't want to say major resistance zone. I wasn't expecting that big of a rejection from this little supply zone that we have, but it was basically a 2-hour order block. Okay, so right here, you can see this last 2-hour up candle before the aggressive expansion towards the downside, kind of having that sell to buy effect right here, and it left a little supply zone behind, and we did have some liquidity in front of it, you know, a little inducement on the order block, taking these highs, tapping into that. I wasn't expecting the biggest rejection of it, but we did get some resistance from it. So coming into the block, we kind of did it in like a sideways fashion, right? It was Friday. Yeah, in the entirety of Friday, we kind of had like a sideways grind up, leaving lots of liquidity behind, and then we had that Trump Bitcoin event where they talked about Bitcoin, and you kind of got that liquidity sweep before you went higher. But this was basically your weekend range, right? This is your range high. Right here, this is your range high, and that's your range low. And it's basically a Saturday high and a Saturday low. And this is all just internal price action. So price action within the range that kind of had this curvature up effect coming into the range high. Okay? So this is all weekend liquidity. That's also what I posted. You know, we can also make it a trend line because it does look a bit like a trend line as well right here. And we can call this these Sunday lows, Sunday lows, Sunday lows, Sunday lows, Sunday lows. And what tends to happen is that sometimes on Monday, and when Monday opens, you tend to grab the weekend liquidity, right? So this is all weekend sell side liquidity. Let's make that bigger. There you go. So what happened from there is that we broke out of the range, but it wasn't a good break yet. Okay, it wasn't a good break yet because, as you can see, we broke ever so slightly above it, and then we immediately started ranging. Okay, so whenever you have that, that's not a good range break. That's more like a range deviation. Okay, now following the market structure from the low up, if we just go back in time right here, let's go back in time. Let's delete it, and let's apply the concepts given in the tutorial. Okay. If we follow our local market structure from the low up, skipping over the past few points because they're irrelevant, right? We just want to know the most recent one. We have a high, higher low, and a higher high, right here. Let's make it black. No, red. Red is better. Let's make it dotted. Okay, so this is basically our market structure from the low up. And then from there, in an uptrend, we pull our range from high to low. As discussed in the tutorial, we pull our range from high to low. And then right here, we have our range high, we have our range low, and the range confirms. Okay, so we have confirmed the range, and we're at the range highs, okay, of the range, of this bigger range that we're in. And we know we have lots of sell side liquidity below. And in general, Bitcoin loves to move from liquidity to liquidity. So it will grab all buy side liquidity and then have a rotation towards sell side liquidity and kind of clean up the market in that way. Now, zooming in on this local range, what did we have? Well, as we can see right here, if we're on the 10-minute time frame, we got our first range deviation. Reason why this is not your proper first range deviation is because I want my deviation to be a valid market structure pool, meaning this deviation right here, you know, you have the 2 candles up, the 2 candles down, meaning it's like an actual move. You know, it's an actual move. This is just a random wick. You don't have a proper retracement from it. I kind of see this as one move up, okay? So even though you had a tiny wick here, that doesn't count. It's just one clear move up on the 10-minute time frame deviating it. So that's why I just take this highest point and not that one. From there, we got the move down. That's when we extend our range towards the range high, because as we know, we can always have a potential model 2 distribution in the making, okay? Now, from there, we came down, kind of started ranging within or around the EQ of this local range. Nothing really special going on until if we use our market session tool right here, we saw this was our Asia high. The purple is the Asia price action, the blue is the London price action, and then the orange is the New York price action. We saw the Asia high get taken pre-London, which is very normal, an hour before London, you know. We take that Asia high, and then London opens, and we kind of started ranging. And then pre-New York, we took the high once more, okay? So I always love when my deviation highs and lows also align with the market sessions, you know. So this was our Asia high, and then London takes Asia, and then New York takes London. You know, it's always extra nice. You can clearly see the market maker involvement when that happens. And again, if I'm on a 10-minute time frame, what is one pool, okay? Like, yes, you had a deviation right here, but you don't have a pool away from it. So it's not really your proper deviation. This is just one entire move up, okay? Because it's just 2 candles up, 2 candles down, valid deviation. So right here, we deviated the high once more. And again, indicating that we can have a potential Wyckoff Model 1. Like I always say, how do you confirm a Wyckoff Model 1 distribution or just a Wyckoff in general? You know, if you break market structure from the low to the high of the third tap, okay? So between tap 2 and tap 3, this is our lowest point. From there, we measure the market structure using the 6 candle rule, and if we break that, we get our trade. Now, applying the market structure rules also given in the tutorial, we have a high, we have a low, and we have a higher high. So this right here was our market structure low, and that right there is our break. Now, always check what the highest time frame valid pool is. So also on the 5-minute time frame, right? Also on the 5-minute time frame, this is a valid retracement. So I would want to see a 5-minute break. Okay? If it's a valid 5-minute pool, I want to see a 5-minute break, because the higher the time frame, it will overrule the lower time frame. So right here on this candle, we didn't have our break yet. And then right here, we do get that break. What is the invalidation when you're trading Wyckoff? Obviously, it's your third tap high. However, in this case, what I did is I can keep my stop loss above that third tap high, which is the most clear invalidation, but the RR wasn't the best. If I had my RR towards the range low, it was only a 0.6, right? From the top down, you actually have market structure. You have lower highs and lower lows. So I kind of saw this lower high as my test from the Wyckoff schematic. Right here, if you have a Model 1, you can see you have your tab 1, tab 2, tab 3, and this is your test. It's basically your first local lower high. It doesn't always have it, but if it has it, and the RR isn't the best. If I keep my stop loss above the third tap high, I like to do it above the test to get that extra juice, right? So it was only a 0.77 RR. And that's where context plays a big part, okay? Because this Wyckoff was confirmed, you know, we had these lows, which was some nice sell side liquidity, right? Nice little target, a liquidity target locally within this range. But this is where context plays a big part, because we know that we are also in a bigger range right here. So this whole move right here can just be a range deviation of this bigger range, where this is your range high and this is your range low. And within the range, we have a lot of sell side liquidity. So this could break down from the range, then get a back test and potentially have that range rotation down, right? Because we have all those sell side liquidity weekend lows waiting for us lower. So I took a TP, I took a 50% take profit at this range low, only realizing like, I think I only realized like 0.3 to 0.4% on this trade. And then I let the rest run, okay? I let the rest run for this range low target right here. And obviously what happened, I think we all know, we had a massive cascade down, okay? Boom. Very easy. And the reason why this was so aggressive is just because there was no proper support. It was just all weekend lows to be taken, waiting to be taken. So that's the trade of today. I realized around 3% on this setup because it was like 7 extra RR, but I already took out 50. So it was around a 3.5% gain. Very nice, because for the people that are new here, my weekly average is around 10% a week. I always aim for 10% a week. If you do the math on 10% a week for like 40 weeks of the year, you'll make a lot of money, right? So this was a nice little 3+% gain on Bitcoin, okay? And it was simply just a Wyckoff Model 1 distribution as my trade confirmation, but then given the context that we were in a bigger range and we were deviating that bigger range high, I knew it had the deviation to have or the potential to have a full-on range rotation, especially because we only had liquidity inside of the range, okay? So if you took take profit at the range low, watching my tutorial, that's completely fine. That's also the technical target of the Wyckoff, but these are the scenarios where context plays a big part, okay? Now, that was the only trade on Bitcoin. However, I do want to go over how you could have made a fortune trading this right here. Because for the people that saw my analysis on the BB stream, right? What happened is we came into crucial demand. And I was talking about you didn't want to lose this low. You didn't want to lose this demand, and you didn't want to lose this low because then you would break daily structure. And as I said, we want the structure in a V-shaped recovery in a macro model 1 to be respected. So for more information, you go back to the BB stream and watch me talk about it there. But basically what happened is, you know, we formed a range inside of crucial demand, and then we had like the nice little sell to buy breaking structure on New York, right? So if we grab our 21530, that's right here. So on New York, you got the move down, sweeping these range lows, and then, you know, deviating it and breaking back inside the range and having the expansion up, right? Breaking structure, actually. So you broke that range right here. So applying market structure, right? Let's get rid of this vertical line. Applying market structure, we have a lower high and a lower low. This was basically a range, and then we had the higher high. Okay, right here we had the higher high. When I'm talking about we are at a crucial point on the chart where this needs to be a higher low, and then we get that daily break. So we get that 15-minute break outside of the range after New York opened. And we're at a crucial support POI where you could potentially find a long right here and then target all the way up here, okay? Obviously, when we get that 15-minute break of structure, I'm looking for a higher low for a higher high. So whenever we get that break following the structure pool and we're breaking outside of the range at a crucial support point of interest, I'm expecting a higher low for a higher high. And I'm looking for a higher low for a higher high, right? Now, what developed? What did price do after breaking structure here? Let's zoom in. Okay, let's zoom in. So what happened after breaking structure? Let's stay on the 10-minute time frame for now, or let's do the 15. Is the 15 fine? The 15 is completely fine. Okay, let's grab our 2. Okay, this is where we had the break. We're expecting a higher low for a higher high. Right here, we have our 6 candle rule. 2 candles up, 2 candles down, 2 candles up. In a uptrend, you pull your range from the top down. Boom, here's our range. Okay? Zooming in on this range, you could have made so much money because we have our range low, or we have our range high, and we have our range low right here. Okay? Right here, this is your first deviation of the range high. You know, you get the peekaboo above and you close back inside immediately, having a retracement towards the downside. So this is your deviation 2. Okay, let's extend our deviation high towards that high. Let's go even on a lower time frame. There you go. Price can always, okay, and this is going to be in the advanced Wyckoff tutorial part 2, price can always have a distribution that goes over into a accumulation, okay? So overall, we are expecting a higher low here. But if I see a distribution, I can take a short and take it towards the range low, and that can turn into an accumulation because overall we're bullish. But locally, you can have a short scalp. So when we are deviating the high, bells and alarms should be ringing inside of your head of, hey, it can be a potential distribution, right? We deviate the range high right here. What is a rule for a third tap of a Model 2? It needs to grab either extreme liquidity or extreme demand. Now, this is literally on a lower time frame, the most extreme liquidity, because this is your range high and this is like literally the wick next to it. It's like the last wick high before the range high, right? So on a low time frame, this is your extreme liquidity. Like you could even say that this already was your extreme liquidity, right? But if we're talking extreme, then that's the extreme liquidity. So what does price do here? It takes the extreme liquidity without taking the range high. And guess what? When do we confirm the distribution? Breaking structure from the low up, boom. And that is right here on this break of structure. So on this break right here, you know, you get the pullback, you short it, you put your stop above the third tap high, and you target the range low. Okay? This is a completely valid Wyckoff Model 2 distribution short. You even had a return to zone, meaning you even had these sell side lows to be taken, right? Sell side liquidity lows. There was no demand in this area. All demand was mitigated, so they're just lows. No resistance at all, right? So we got the distribution, we got the confirmation. You could have made 1.4%. That's a step closer to your 10% weekly goal. In general, 1% a day keeps the day job away, right? Very nice setup. Now, what can always happen is a distribution going over into an accumulation, because the technical target of a distribution is the range low. Well, if we start deviating the range low, that could indicate that we potentially have an accumulation in the making. This is something I will go over more into the advanced Wyckoff shit, but in general, you need to understand these general concepts first before you make it harder on yourself. So what happened is we got the distribution and we tapped the range low, which is the target. Because overall, we're bullish. So every short is a short scalp because we're looking for a higher low. Then we started deviating the range low, right? We got the deviation and we came back inside, like a V-shaped recovery, okay? Like I said, we're watching for an accumulation. Let's extend the range low towards the new low, okay? We have our range low here. This is our first deviation. What is extreme demand or extreme liquidity? Well, if I had to pull a demand zone, it's this candle right here, right? It's not your typical order block because it's not a black candle, but it did the exact same thing. You came up, you came down, and you pumped away from it, right? And this candle closed bullish, meaning this candle, buyer stepped in, closed the candle bullish, and then it pushed price higher. So it's demand. It's your extreme demand. So your extreme demand is right there, and this is your extreme liquidity, right? You can also call this your extreme liquidity. Both are right. I think if you'll take this low, you'll also take that low, in one wick. So for a Model 2, price needs to grab either extreme liquidity or hit extreme demand. Well, right here, another break of structure, but a liquidity. So right here, you tapped extreme demand, okay? When do you confirm a potential Model 2 accumulation? Again, if you break structure from the highest point to the lowest point towards the tab 3. So this is tab 2, this is tab 3, this is your highest point. If you pull structure from the top down, you got lower highs and lower lows until you get the break right here. Boom. Right there. That's your break. That's your confirmation for the Model 2. Now, mind you, this is a Model 2 accumulation in an area backtesting the previous range high right here. So this is a Model 2 accumulation in an area where we're looking for swing longs. So I would never in my life target this range high. I would target all the way up to a higher high on the daily time frame, right? Target all the way up to here. That's what I was saying. I was saying this in real time, live on the stream, right? I'm not talking, I'm not capping. I was saying this live on stream. This is a 15 or 14 risk to reward setup. And it was so easy. Again, the confirmation was a Wyckoff Model 2. Again, a Wyckoff. And you even had a distribution that went over into an accumulation, which can happen, and it happens all the time. And then following the overall context of the chart I explained on stream, I would target that high, especially because this is also just one big liquidity curve, right? Where each high is a lower high. All these highs, this is a high, this is a lower high, lower high, lower high, lower high, lower high, lower high, lower high. So it's just one big trill of stop losses that gets squeezed. And that's why you get the aggressive expansion away, because they're just stop losses, right? Of people shorting this move down. So again, this is where context plays a bigger part, okay? But the entry confirmation is the exact same. And even if you took profits at the range high because you didn't know about this, you still would have made 1.8%. Count that with the 1.4% you made on distribution, and you made 3% in a range that took 6 hours. You know how good that is? And to clarify, I did not take this trade because I wasn't online for it. This short confirmation was on 2030. I was out for dinner, and this is at 10:15, and I'm not online in vacation on 10:15 behind the charts. Okay, well, I am right now, but at that point I wasn't. Okay, so but again, look at the confirmation, a distribution into an accumulation. Both confirmations are the exact same, and then you go higher. But it's just funny to see that right here, because we know we are looking for longs, we only take it towards this range low. But we are looking for longs and for swing longs, and that's why we can run this or accumulation way further for a better return, okay? So that's all the thing and all the price action on Bitcoin, okay? I missed these two setups, which it would have been an amazing trade, but we got this one, so that's nice. Now, going over into gold, which is just next. Again, we had this beautiful distribution going on. It's an absolute amazing distribution, okay? Massive distribution, and I'm very convinced we're going to visit this range low, okay? Very convinced we're going to visit this range low. Now, we have to tab 1, we have to tab 2, we have to tab 3, and I was looking for a retest short, okay? So, the most crucial point and the most crucial low to break was this 4-hour low right here. Okay, we did already break 1 hour structure. Let me turn off this market session indicator. We did already broke 1 hour structure like right here. That was our 1 hour break, kind of confirming the distribution because we already had the buy to sell right here. Talking about this buy to sell. But this 4 hour break was your main market structure pull from the low up, you know? So once you broke this uptrend of higher lows and higher highs on the 4 hour, that's when I was like, I would say with 100% confidence we're going to visit the range low. Also, below that 4 hour low, we had a demand zone. And then, you know, we had that volume area high of this bigger volume profile of the entire range right below it. So I was really like, okay, you know, breaking this 4 hour low, breaking back inside the volume profile, that was a crucial point for me. And what we did is we SFP'd it, right, at the time. So we SFP'd at the time, but it wasn't, we SFP'd at the time, tapping into demand, and then we went up. And we went up pretty slowly, okay? Now, an SFP can be temporary, especially when you have a macro distribution like this. It happens all the time that, as you should know, a Wyckoff Model 1, all these LPSYs, don't take them that literal. Just see them as lower highs. A Wyckoff Model 1 oftentimes just has lower highs. So, it can easily come back up. It can easily come back up right here and just put in a lower high and dump more, right? And that's exactly what I said on Discord. We can expect a lower high. And I was looking, where would the lower high make the most sense? Well, we have this massive resistance zone right here, but it was too obvious for me, okay? And the way we came down after breaking this 1 hour structure right here, the way we came down, we left this big ass liquidity curve, okay? So right here, we left this massive liquidity curve, and then this would be your liquidity high right here. Well, not even that high. This is the high. That's the supply zone. Okay. So I'm talking about this liquidity curve right here, and this was your 10-minute supply zone. Or was it the 15-minute? 15-minute. There you go. This order block. Right here. So what I was thinking, okay, what if this SFP right here at the bottom, tapping into the demand zone, is just a temporary SFP to come back up, sweep all these bad highs right here, before going lower? Because we're talking about market maker involvement, and then we're talking about market makers that short billions of dollars worth of gold, right? So sweeping all these buy side liquidity points will make them fill their short positions even more. So I was looking for a short right here, and I can confirm this. I don't know if I posted it online, but just for you guys to know, I'm not capping, because I don't do the capping stuff. Just so you guys know, let me show you. Let me show you right here. One second. There you go. Copy and pasted. Boom. This was at the time. I said gold took a significant liquidity point coming into a 10-minute order block. Apparently it was a 15-minute order block. We failed to break the 4-hour low, which is this low I was talking about, and tap demand, bouncing off the volume area hell. However, this can be a temporary relief rally for a LPSY on the bigger Wyckoff Model 1 schematic. As I said, I put the drawing here. We either reject from this massive resistance zone, which was more unlikely, or we reject right here. That was my drawing. Reject right there. This is not the chart. This is a drawing. Look what happened. We rejected right from that point. So what was my entry confirmation? It was simply just a 10-minute break. Or a 5-minute break. It was a 5-minute break. My apologies. Right here. Following structure, this is your most recent 5-minute low. And I just entered on the break right here. Just entered on this break. Put my stop above the high. And then potentially run it down for a swing short, right? That was simply my confirmation. Just trading the lower high of this massive swing Wyckoff distribution. Potentially making around 9% on this swing short, okay? I will definitely be taking profits right here because it's your last demand zone remaining before the range low. And then it's also backed by the POC, which has this massive volume spike. So there's a lot of volume in that area. So I'll definitely be taking profit there and de-risking my position in case we do reverse, okay? But that was simply just trading the lower high of the massive Wyckoff. This was the most obvious point for me after this point, and I entered on the break of structure from the low up. Simply as that. Now, this is our new supply zone, which is basically just your buy to sell before dumping down, right? Locally today, I had a very nice trade on gold. I took a loss, and then right after, I took a massive winner, okay? I'm going to talk you through it right now. Let me check if everything is going okay. We're 30 minutes in. Okay, I don't want to make it too long for you guys, but I'm just going over everything in detail, and it's a weekly recap, okay? So I have more trades to go over. But right here on gold, on a macro time frame, we are bearish. Okay, we are bearish. In general, following this market structure from the top down, like I discussed earlier, I'm swing short from right there, but we're having lower highs and lower lows. So I am expecting a lower high for a lower low. We just don't know where the lower high is going to be yet. We can easily come back up and tap that supply zone for the lower high. If we come there, we can even look for swing shorts as well, right? Now, when I came to the charts, I realized, okay, we're looking for a macro short, preferably a macro short in this area. But we don't have to get there. We're in a wyckoff. We can just dump any moment aggressively. However, from the low up, we are in an uptrend, right? From the low up that we put in right here, we have higher lows and higher highs. Higher lows and higher highs from the low up. And then when I came to the chart this morning, I always, on gold and on Forex, I like to check my Asia session highs and lows and, whatever happened, especially on the Monday. So I'm checking my Asia session, right? And I'm like, okay, we came up right here on Monday open, we pumped, and then Asia opened, and we kind of had a move down, and then we started ranging. Okay, we had a move down, then we started ranging. We have a local downtrend right here. We're in a local uptrend. We also have a local downtrend from the top down. In a downtrend, we pull our range from low to high. And right here, okay, right here, I have my range low. I have my range high on the market structure pool I just drew. Okay? So we have our range points where our range low is also our Asia low. Now, what I was watching is we had some nice demand right below that Asia low. So what I was checking is, what if London opens? Okay, what if London opens? So London opens right here. What if London opens, takes out the Asia low, taps into this demand zone, and then we get a structure break back to bullish for a range deviation play? It's not a wyckoff, it's a range deviation, okay? And a range deviation is simply trading the second tap of the range. So this is the second tap of the range, and that's what you're trading. A wyckoff, you're always trading the third tap, okay? You're always trading the third tap of the range in a wyckoff, even if it's a higher low or a lower low, right, for a Model 1. But now I'm trading the second tap. When I have a second tap, I always like to see a break back inside the volume profile. So I'm checking the volume profile. Okay, the volume area high is right there. What happened in our London session, we took that Asia low, right? If we can see with the colors, this is our purple low, and in London price action, we take our purple low, which is our Asia low. Okay, very easy to see with the colors. Now, checking our structure from the top down, we can see that locally right here, we have our break back to bullish. Okay, we have our break back to bullish right here, but it's not a break back inside the volume profile yet. And it's a requirement for me. When I trade the second tap, I want to see a break back inside the volume profile. So right here, we had our second break. Okay, right here, we had our second break. Boom. Lower highs and lower lows, higher lows and higher highs. Okay, let's make it a line so you can see it way clearly, because I'm already have the dotted line with the volume profile. So you can see the market structure drawing right here, higher lows and higher highs. And we deviated the range low, tapped into demand. We broke structure back to bullish, coming inside the volume profile. Right here is where I looked for my long. Okay, right here is where I looked for my long on the demand mitigation after the second break back inside. And I was targeting these highs right here. Whenever I'm trading the second tab, I don't always target the extreme point, because you can't, because it doesn't have to take the extreme point in a second tap. Only when you have a wyckoff, you have a full rotation, okay? But we had these equal highs right here, and we had all these lower highs prior. So I was just expecting a fast move up, taking the high, and then from there we can, see how price develops. But I was targeting this liquidity point right there for a nice 2% gain. And that was the setup, invalidation below that low. And what happened, right? What happened is price started farthing around here, coming back down. Started farthing around here, coming back down, tapping into that demand a bit deeper before moving up right here. And then we missed my take profit by a hair. Like literally a hair. I had my take profit on that high, and I got front run by a hair. However, We got the higher low for the higher high right here, right? Higher low for the higher high. So in the meantime, I trailed my stop loss towards this low. Okay, I trailed my stop loss towards that low because we already got the move up. I didn't want the price to come back down there again. If I wanted that take profit to be hit and this position to keep running. So I trailed my stop loss going from a 1% risk to around like a 0.6% risk. Kind of a slight de-risk, but then we missed my take profit by an absolute hair, okay? By a hair. And then we came down once more. So this is my stop loss now. This is my stop loss right here. And then I got kicked out of my position. Very unfortunate, but we executed like we should have. We stuck to our rules. We did not take two profits too early because we got greedy and we were impatient. No, our take profit did not get hit. We trailed our stop loss, which was valid because there was the higher low for the higher high, and we got stopped out. Yes, is it a loss? Yeah. But is it an actual loss? No, because we stuck to the plan. Okay? If you stuck to the plan, it's not an actual loss. Now, from there, multiple things could happen. We tapped into this demand zone, so I wasn't really expecting this low to be taken out again. It can happen and I will trade it, but like, is there a reason to take that low again? We already took it. London already took Asia, so maybe when New York opens it could, but in general right now when we're still in London, I wasn't expecting it. And this was our extreme liquidity point. So I was watching this for a potential Model 2, for a Model 2 long, where you take this and you break it back to bullish right here and you find a long on the retest. And this is your third tab low. And then we have a very easy target because look at these highs. Such an easy liquidity target. But we didn't get it. We didn't get it for a Model 2. Right here, we didn't get it for the Model 2. We just had an immediate move down, right? No structure break back to bullish, so no reason to take the long, okay? It's just one move down. Boom, lower highs and lower lows. So no break back to no break back to bullish in here, so no reason to long it, okay? No reason to long it. And then right here, we took the low once more, right? Now, this is where things get interesting. We took the low once more. There's always a chance for a Wyckoff Model 1, right? Because we still have the buy-side liquidity target right above. It is a Model 1. It's looking like a Model 1, okay? Did I expect a Model 1? No, but I don't trade what I expect. I trade what I see, right? When do we confirm a Model 1? If you break structure from the top down back to bullish, right? So our most recent expansion towards the downside is lower highs and lower lows. And then right here, we have a valid market structure pull up and then two pulls down. Here on the lower time frame, you can see it clearly. Two up, two down, two up again, this being your break. And then I checked my session indicators as well. Right here. And it's like 20 minutes before pre-New York. So New York for me is an hour before New York. So it's technically still in London, but the timing is amazing. The distance between the taps is good. London taking Asia, and then almost pre-New York taking London. And we did get the break of structure that confirmed the accumulation. And we still have a very easy target above. So you can guess where my entry was. We broke structure right here. I saw the first bullish candle, literally right there. The first bullish candle right here going up. That's why I entered. I put my stop below the low, and I targeted the range high. Boom. For a 3RR play. And that's exactly what happened. Boom. Right? Exactly what happened. Easy move up with higher lows and higher highs. The moment price had this higher low for this higher high, I moved my stop loss from the third tab low towards this local low, which is kind of your test low, like I described earlier in the video, right? So this netted me over 3%. We lost around 0.6% on that first long, and then we made back 3%. So overall on gold today, we made a nice 2.4%, which is amazing, right? And then I had a call, so I wasn't really focusing on the charts. But as I said, accumulations and distributions can go over into distribution and accumulations, right? And overall, we were bearish. So I was looking for shorts if we got any confirmations deviating the range high. And we did get it, but I wasn't able to trade it because I was in a call. So right here, we deviate the range high after sweeping all buy-side liquidity. And then we broke structure right here, right? So we broke structure right here. Boom, break of structure. And then I had a limit order of a 0.3% risk on the supply zone. And the reason why it was only a 0.3% risk is because, yes, we have the break. It is also a break back inside the volume profile right here, right? It's almost at the volume area low again. But I never like to trade range deviations when you have a Wyckoff Model 1 backing you up, because it could just be like price playing around before moving higher, right? So that's why it was only a 0.3% risk. But then I had a limit order on it, right? And then look what happened. We came ever so close to it before dumping down, but we never tapped it. We never tapped it. So that was very unfortunate. But if you wonder, yo, why did we dump down? Well, overall, we were bearish because we're in this massive distribution, right? But I still have the short open from right here. So that distribution is covered, okay? That distribution is covered. But that's what happened today on gold. So, you know, New York opened, and that was actually the beauty of it, right? You have these like Asia session highs. It's not particularly Asia, it's more like pre-London. So you have these pre-London highs waiting there, and then New York opens, grabs the highs, and just dumps price down. Very typical aggressive New York move, right? So again, the trades that I took on gold, a range deviation trade, which is trading the second tap, which I have not explained to you guys in the tutorial, but for the followers that have been following me for a while, you know I also trade second taps. And then we had the Model 1. Again, simply a Wyckoff Model 1 long. So we had it the distribution short on gold, which was a Wyckoff Model 1 short. Then right here, we had a Wyckoff Model 1 long, okay? And then this was a market structure continuation trade of a massive Wyckoff Model 1 that's going on a higher time frame. So it's Wyckoff left and right. And that's also how I traded gold or euro. My apologies. How I traded euro. So going into euro, I actually just posted a video or a tweet on my Twitter talking about bars formation, right? And how this is an extremely good weekly high on euro. I was talking about, you know, when your high looks like this on the bars or the bars candle thing, where your high looks like this, where it's a nice high. Basically, it's just like a Model 2 on a candle formation where you have the liquidity sweep. Right here, you have the liquidity sweep. I cannot, here, this is it. You basically have the liquidity sweep, and then you have the lower high. Basically, this is a Model 2 on like a candle formation type thing. And whenever you have this and the third candle closes lower, what can you look for? Well, if the fourth week opens and you can have a pullback, that can be a swing short. So applying this concept is literally what I talked about on my Twitter. You can go look it up. To right here, well, right here we have the exact same thing, right? We have the nice high formation that got confirmed on this candle. So when this week opens and you get a move up, that's where you look for swing shorts going down, right? It's right at this point. So I was bearish, and like my bias was bearish, right, on euro, which was the correct bias to have because we did get the move down. But very unfortunate scenario that happened on euro. Because what happened is right here, this was our 4-hour market structure. And we got the break right here. 4-hour break. So expectational order flow is a lower high for a lower low after breaking structure, right? Which is what happened. And then we had a nice resistance zone right here. And prior to that resistance zone, we started a range, okay? So pulling your market structure from the low, because we're in a downtrend, you put from your low to your high right here. I'm not going to go over into how I pull it every single time. It's explained in the tutorial. So you have your range low, you have your range high, Okay, the range is confirmed. And now we look for potential Wyckoff range deviation and distribution and accumulation trades. Okay. You can even see we came down and we kind of hovered around that range low without taking it, meaning this is a very easy target from a liquidity perspective about sell side liquidity. So this is nice liquidity. And then right here, we got our deviation numero uno, okay? The deviation number one. Now, we extended towards the new deviation high because we know we can have potential model one because we do also have the resistance zone above us. So I would love this idea, right? Where you have a model one tapping in that supply zone. But we can also always get a model 2. Now, model 2, third taps, what's the requirement? Hit extreme supply or grab extreme liquidity. This is our extreme supply zone. This is literally the last candle up before down, which is an order block. And you tap it, right? You tap it right here. So when do you confirm a distribution? When you break structure from the low up, right? So this is tap 2. This is potentially tap 3. Confirmed if you have a distribution. Or if you have a break of structure, the break of structure was right here. This was my entry on the retest. There you go. And then I was targeting all the way down here for the trade for a nice 4.68%. I can show you the proof that I was talking about this setup right here. Here. Give me 1 second. Boom. 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 Right here. You can see literally the exact same chart right now. You see that? Liquidity curve right here, model 2 trade. It's exactly this entry right here. Okay. So I was watching this setup and I did take it because we tapped extreme supply and we got the break. And we have the return to zone with the liquidity below us. So it's a valid setup. Okay. Also, no reason to go higher because you tapped extreme demand. And it was the extreme demand. Okay. What I kind of forgot, I forgot about this setup and I kept it open over the weekend. Okay. So normally I don't really do that because you can have like massive spreads. But overall, we were bearish, also regarding the higher time frame analysis we just did with the candle pattern. And I took this short. What price ended up doing? We're going to get rid of this position. We know we entered right here. Right here, we had our extreme supply zone, our new extreme supply zone. Since this one got mitigated, on the mitigation, we left supply behind. So we got to move up, tapping in that supply zone, and then you broke structure again right here on like the 2-minute time frame. It's not valid 3-minute structure, but I know it's valid 2-minute structure. And that could just simply be your LPSY, your second LPSY, just a lower high. After a distribution, you always can get a lower high. The invalidation is above the distribution high at that point in time, right? Now, what happened is when I was asleep on the Monday open at 2 in the morning for me, we took this low right here. We took this low, we swept the liquidity from it, and we broke structure back to bullish right here, which is your market structure from that most recent expansion towards the downside, right? You broke that back to bullish after sweeping that low. So that's not the most bullish or bearish sign in the world when you are short. You don't want to see that. You want to see that low break with conviction. But Asia Open it's exactly on Asia Open. Asia Opens, takes that low and breaks structure and has to move up. Typically like a Monday nasty Asia Open move. And what did it do? It grabbed my stop loss. So it grabbed my stop loss right here, right? Grabbed my stop loss. And then we broke structure back to bearish right here. So whenever you have that much time between this third tap that I thought was going to be the third tap and I expected was going to be the third tap, and you have that weekend in between and Monday opens, you can get a move because now what is extreme liquidity? When you have a third tap, it either needs to grab extreme supply or extreme liquidity or both. Both are also fine. Well, if you're right here, it can come back up, take this point, which is your extreme liquidity point, and have a new third tap. And it happens more often than you think. It doesn't happen all the time. But that's like, it's a kind of a scenario where if it happens, you just need to let yourself get stopped out and re-enter again. That's simply it. You get stopped out and you re-enter again on the break. Because at this moment, this is a valid third tap. Why? Because it grabbed extreme liquidity, but extreme liquidity was in that case our entry. It happens more if you compare like, a Friday distribution to like a Monday open with the weekend in between. But this is 100% a valid trade. Enter on that break after sweeping that liquidity and then having the move down we were expecting already earlier, right? With this massive return to zone. This is a very easy setup, especially when the higher time frame is that bearish, and this can just be literally the week opens right here. That's your weekly candle open, and then you get the move up, and then you get the confirmation for the distribution short, and we just talked about that weekly pattern, right? We just talked about that weekly pattern where this move up, which is literally just this candle's wick on the weekly candle, can be the weekly high. This wick right here, after having that nice top formation, can be the weekly high, right? Let's get deleted. This move right here, that's the move up that you just saw that stopped me out. That can be the weekly high, and you can have a swing short, okay? So it was a very easy trade right here where you had the range, and then 1 tap, 2 tap, 3 tap, grabbed extreme liquidity right here, and it got the break. However, I wasn't awake for it. It was mid-Asia at 5 in the morning, so I wasn't awake, right? Unfortunately, I wasn't awake, and then London opens, and it just dumped price down. But this is a massive trade. This is a trade I would take with 2% risk. So that would mean like you would make fucking 12% on a trade like this. Like 12% is insane, guys. This, like, if you watch if this is the first time you're watching my videos, this is not normal. These setups don't come that often. So when they come, I know when to double down on my risk. These setups don't come that often where it's so obvious using my TA. Okay, so very unfortunate it arrived at 5 in the morning. So I got stopped out for like a bit less than a 1% loss. And then we got the move down. And I would 100% would have re-entered right on that liquidity grab, which was literally my stop loss liquidity grab before moving down. Okay? And it's like you lose 1%, you make 12. Who doesn't take that? I would take that any day of the week. Lose 1% to make 12? Come on now. So, yeah, good trade management by me. Unfortunately, I just wasn't awake for it. I wasn't awake for it, and that happens, and you need to let those trades go. If you keep on watching those trades of, imagine I would have taken that. Imagine if I could have taken that. No. You weren't awake for it. That's totally fine. It's 5 in the morning. Don't blame yourself. On to the next. Okay? On to the next. And then the next trade is going to be the last trade in this trade recap of the past week. And it was also the last trade that I took. It wasn't exactly the last. Like the trade of today was the last trade. But it was a trade on Pepe. Okay? Was a trade on Pepe. And basically on the Pepe chart, we got this aggressive expansion towards the upside, and we grabbed like all liquidity within this move down. So we had to move down here, like this move down, left behind a trail of liquidity. This is your extreme liquidity point, and you grabbed it right there. You got the aggressive expansion, grabbing literally all liquidity in this move down besides the main high. And then you start arranging. So pulling your market structure from the low up, you have higher lows and higher highs. You guys know in the uptrend, you pull your range from the top down, all discussed in the tutorial. And then very simple, like it's so simple, guys. Range high, range low, deviation 1, you extended. Deviation 2, indicating a Wyckoff Model 1 distribution. You go into a lower time frame to confirm an entry, right? You confirm an entry on a lower time frame. Let's zoom in. And I think this is where I actually used the 30-second structure, no? Because we got the high volume spike. Or was it also 1? Let me check. Let me double check for you guys. Oh no, it was 1 minute structure. It was just 1 minute structure. Boom. Break. So it was such a good looking high time frame setup where, you know, you have to tap 1, you have to tap 2, you have to tap 3. You have all these liquidity lows. Like there was no demand. It was just literally liquidity. All these lows just waiting to be grabbed down here. Very nice distribution. You on the left, you grab major buy side liquidity. You know, you had an aggressive expansion towards the upside. When you have an aggressive expansion towards the upside, you can expect the range to form. You grab significant liquidity on the left. So you could have a slight retrace before potentially having a continuation. You got the distribution with the 1 tap, the 2 tap, the 3 tap. You wait for your market structure break on the low time frame to confirm that distribution, which happened right here. That's where you enter, like I always say in every Wyckoff trade, and then you target the range lows. Okay? This netted me over 4%. Again, to finish it up, I posted this. I talked about it. I'm not capping. But just to show you guys, this was, which day was this? The 24th. The 24th. Oh, I'm way back. 1 second, guys. 1 second. Oh, it's in the altcoin. There you go. Boom. Copy and paste this. Boom. The image couldn't be copy and pasted. Nice. It's way too large. Then let's just do it right like this. Uno segundo. For all my friends, if you've made it this far in the video, shout out to fucking you. You're the GOAT. You're gonna make it. If you're listening to me right now, let me give you some motivation. The way I trade is so simple, but the only way I can explain it so simple to you is because it took me 10,000 hours. Yeah. I was always very disciplined. I was always pretty smart. You know, I saw patterns pretty fast. I can learn pretty fast. But with trading, it was completely different. Okay. I didn't recognize myself when I started, over leveraging, no good risk management, no discipline. And it just took me 10,000 hours. I had the luck of starting when I was 16. And that's why I'm pretty young and I'm already making a living out of trading. But it just took me 10,000 hours. Okay. I'm already giving you the blueprint in these videos. I'm literally giving you the blueprint. So you can shorten it up from 10,000 hours to maybe 5,000 hours because you already know what to look for. I started off with indicators and all that stuff. The way I trade is the way to go, okay? Smart money concepts are everywhere on any time frame, any second of the day, on any asset. So you have the blueprint. You know how to use it. I have given you the information for free, okay? Literally. Now you just need to put the work in yourself, and then you'll make it. That's simply just the way it goes. I cannot put that work in for you. I can just give you the blueprint, and that's it. But like I said here, 24th of July, 1757. 1757 is right at that break right here. You can see it on this low area of my bulk in black. 1757 right on that break. You can see that 1800. I posted about the Pepe short. I took it, and we got to move down. You know, take profit at the range lows, and that's it. That's literally just it. It's so simple. I don't even want to overcomplicate it. Tap 1, tap 2, tap 3, waited for the low time frame break, took the short, stop loss above the third tap high, take profit at the range low. That's it. Exit replay mode. That's what happened. That's how I took the trade. So simple, right? So simple. So that's the last trade that I took in the past 7 days. It netted me around, you know, again, Wyckoff Model 1 distribution, netted me around 4.5%. I had a 1% loss on euro and missed out on the 5% to 10% gain, unfortunately. Had a nice 3% gain on gold, around 2.6 to be exact. And then we had a nice 6% gain on Bitcoin. So that's 6. That's almost 3. So like around 9. And then we lost 1. That's 8. And then we made 4. So we made around 12%. Still hitting my weekly goal while not looking at the charts like at all compared to what I normally do, right? So still very nice. The trades are always there. And yeah, that's it. I'm surprised my computer is still running. It's exactly an hour. I think that's perfect. If you've made it to the end of the video, you're going to make it. Trust me. Your journey isn't going to be a straight line. You're going to have peaks and you're going to have bottoms, so to speak. I don't know how to say it correctly. but in the end, you will make it if you don't give up. Okay, so love all of you guys. Appreciate the support. And as I said, it's a mutual exchange. You know, I teach you guys, making me a better trader, and then you guys learn from it, making it yourself also a better trader. So see you guys in the next video. Peace.